Hello everyone, and welcome to a short look at our results for 2019. I intend to give you an overview, then Stephen Pearce, our Finance Director, will cover the detail in the numbers, and I will come back and reflect on our broader progress. So first, safety. For us, safety is and should always be front of mind. No company can claim to be sustainable if it is not doing its utmost to safeguard and enhance the well-being of the people who work for it. Tragically, 4 of our colleagues were killed in work-related incidents at our managed operations during 2019. When we take into account external incidents, including 2 off-site commuting road accidents, we lost a total of 18 people in 2019. Let me emphasise that no financial success or production target is worth a life. Zero harm has always been paramount for us, and we must continue to strive to raise our safety performance so that we do get to and stay at zero and zero harm. Every one of us at Anglo American must be unconditional about safety, no ifs and no buts. The Elimination of Fatalities Task Force that we launched during 2018 has now covered all our managed operations, interrogating the key reasons behind fatal incidents, and is now prioritising actions to better identify and manage critical hazards to remove and reduce potential for serious and fatal incidents. Across the breadth of the business, we recorded another all-time low total recordable injury safety rate, representing a 17% improvement compared to 2018 and a 59% improvement over the last 6 years. Looking at health, the number of new cases of occupational disease across the group declined to 39, our lowest ever, reflecting upgraded work environments and associated controls. Meanwhile, improved planning and associated operational awareness has meant that we recorded no level 4 or 5 environmental incidents and just 1 level 3 incident for the year. Big progress. The year 2019 has been another solid year for the group, where we've consistently delivered what we promised. We continue to build on the structural and operational improvements that we have embedded across the business, pushing productivity performance benchmarks through our P101 program, delivering volume growth from existing and new operations, and deploying future smart mining technologies across the group. Together, with a small overall increase in prices, this translates into a 9% increase in underlying EBITDA, a 19% return on capital employed, and a total shareholder return for 2019 of 31%, outperforming both the FTSE 100 and the FTSE 350 mining index. Stephen will now go into the financials.
As Mark said, our consistent delivery across the business brought strong results for 2019. Underlying EBITDA increased by 9% to 10 billion, with our mining EBITDA margin steady at a healthy 42%, demonstrating the benefit of owning quality assets and the value of diversification. The single largest contributor to EBITDA growth was our Minas-Rio iron ore operation in Brazil, ramping up and exceeding our production and cost reduction targets, generating 1.2 billion of EBITDA for the year. Across the balance of the business, strong precious metals and iron ore prices more than offset weaknesses in diamonds and coal, as well as a number of factors beyond our control, such as a lack of rain and snowfall impacting copper production in Chile and electricity load shedding in South Africa. We generated attributable free cash flow of 2.3 billion, a 26% decrease, due largely to planned increased capital expenditure and higher cash tax payments. We remain committed to our disciplined approach to capital allocation and to maintaining a strong balance sheet through the cycle. At the end of 2019, net debt stood at 4.6 billion, less than 0.5 times EBITDA. The increased level of net debt reflects the investments we're making in the future of the business, progressing high quality and value-adding growth projects across our product portfolio. Our return on capital employed of 19% was well above our targeted 15% through the cycle return. As ever, ensuring healthy returns to shareholders is critical for us. Combined with the proposed final dividend payment of 47 cents per share, total dividends paid to shareholders in respect of 2019 will amount to $1.09 per share, a 9% increase compared to 2018, and in line with our policy of paying out 40% of underlying earnings. Since we reinstated dividend payments in mid-2017, we will have returned $3.9 billion to shareholders in cash by May 2020, in addition to our recent share buyback program of up to $1 billion due to be completed in March.
The implementation of our operating model, with our focus on efficiency and productivity improvements, continues to deliver significant safety, environmental and financial benefits. In 2019, we produced 12% more product on a copper equivalent basis from less than half the number of assets we had in 2012. As a result, our productivity per employee has more than doubled, supporting a 12 percentage point increase in mining EBITDA margin from 30% to 42% over that same period. Over 7 years, we have now delivered $4.7 billion of underlying EBITDA improvement in terms of costs and volumes. Looking to the future, we still believe there is significant further improvement in the business. By the end of 2022, we are targeting an additional $3 to $4 billion annual underlying EBITDA improvement, again relative to 2017. I will now take a look at our strategy as a whole, starting with the portfolio. The quality, long life and growth potential of our mineral assets are the foundations of our global business. The transformed scope and quality of Anglo American's portfolio over recent years has contributed to our materially improved financial and operational performance. Portfolio-wise, in recent years we have brought on stream our Grosvenor metallurgical coal mine in Australia, De Beers Gaucho Quay diamond mine in Canada, and the Minas Real iron ore mine in Brazil. And we are well on track with the development of our new Quellaveco copper mine in Peru, with first production expected in 2022. We are also progressing a number of other organic growth options across the portfolio, all on time and on budget. On innovation, challenging the status quo is in our DNA as a company. It is part of our culture and is at the heart of our purpose: to reimagine mining to improve people's lives. Future Smart Mining is our innovation-led approach to sustainable mining. Technology, digitalisation and sustainability working hand in hand. When we talk about transforming our environmental footprint, we include reducing energy and water consumption in addition to reducing our physical and visible mining footprint. For instance, several of our new technologies are targeting the metal or mineral more precisely, with much less waste rock and lower water and energy intensity, such as bulk ore sorting currently in operation at our El Soldado mine in Chile, while others will ensure that our people are safely out of harm's way through remote operations or other safety changes. These step-change physical and digital technologies are all about mining sustainably. Our people are, of course, critical to all that we do, and so we must ensure that when we go to work, everyone is welcomed by a safe, inclusive, and diverse culture that encourages and supports high performance and innovative thinking. Guided by our purpose, we strive to always do the right thing for our employees, our diverse business stakeholders, and of course, our shareholders. The results we continue to achieve and the work we are doing to create a different future for mining and for those who experience our business in whatever way are testament to the hard work of the exceptional people at Anglo American. To all of them, And to all of you, we say thank you.